What's up? This is Wade with Trade ATS, and I want to welcome you to this week's weekly forecast video. These videos, I'm going to be going over what we are personally looking to trade and where we think the opportunity is in the Forex markets for this week. So make sure you watch to the end so that you can see everything that we're looking at. First thing I want to do is I want to revisit a pair that we went over last week. I recommended looking at 3 different pairs last week. One was Euro Aussie, the other was Euro Franc, and the other one was CAD Yen. Euro Aussie, Euro Franc worked out beautifully. Absolutely crushed it on those pairs. CAD Yen, not so much. This one went the other way. So I want to revisit that one because sometimes I find there's a little bit more value in studying your losers, figuring out what happened. Is there any lessons that we could learn from it? And then could we possibly move on and actually turn it into a bigger opportunity? Maybe it's set up even more. So I'm going to talk about that one right now. So we were looking to trade CAD Yen last week because according to our research, 87% of retail traders were net short. So we wanted to position against them to go long. But what ended up happening? Well, we started looking at it right about here. And from that point, we can see that we went into what we call a multi-leg expansion. We had a swing low, 1, swing high, 2, swing low, 3, swing high, 4, and then ultimately a big breakout swing low on a 5th expansion leg. So basically just had that classic funneling out master pattern action from this as a point of origin right here. So if you were trading this, or if you attack this, what we're always trying to do is we're trying to buy under value. That would be how you'd want to attack this and pretty much most every situation if you can. That's the safest way to do it. Find the overall prevailing trend. At that point, it was long. We had the support of retail traders being net short, so we were looking for them to unwind and it to push the market the other way. So we want to position against them. As long as you bought under the predominant value point, which was right here, if you bought under right here, which was under minor framework value at the point, bought that turn, or bought anywhere in this turn right here, you could see just like a gravitational pull or a rubber band effect, price gravitates right back up to those value points. So the first key is just getting a strong entry. And that's really what we use those expansion lines for. So, or the value lines if you're drawing them yourself. So that was the first key. If you did that, you did not get too hurt on this one. But what we were looking for when I said according for risk management, I said you want to look basically referencing these 2 boxes or this general range around here. So that's pretty much where we stayed within that range up until this point right here. Now what happened? Well, let's talk about quickly what happened before this. You could see that we went up and we took out this liquidity up here. If you're taking out liquidity to the long side and getting aggressive reactions off of it, remember, we were expecting the market to go long. It had its chance right here because we were breaking the swing high point. It really needed to go at that point, and it didn't. So that should be your first cue to start asking questions. Why is it not going? It has the liquidity to boost off of, yet it's turning. So that should already make you a little bit suspect of what's going on. So what ended up happening right here, we had some big fundamental news announcements come out, and that pretty much threw everything off. All bets were off at that moment, and the market just started collapsing. So it reacted hard to that news. And as you can see, it pretty much just fell. We came through, it boosted off these liquidity lines here, took a pause, came all the way down, hit these liquidity lines here, took another pause, boosted down, hit this liquidity line, took a pause, all the way down. Pretty much you could see it gapped from each liquidity line all the way down here. And now we're resting down at this price level all the way down here. So obviously it went completely against the idea. That's the thing that you got to watch out for, and that's the lesson of this. When you have big fundamental news announcements, you need to watch out. Those things can change the entire narrative very rapidly, so you need to make sure that you're prepared to unwind your position and call your idea off if the market tells you need to. So how did we know that we needed to? Well, again, we had clues that it wasn't taking off, and then by this time we had a 1, 2, 3. This was our 4th multi-leg expansion off of this as an origination point. It really needed to keep you in the money at this point. So by this time, you could do whatever you want, but risk-wise, I'd be looking to start building progress and holding above this expansion line. you can see we formed this expansion line right here and then started settling under it right here. That was kind of the nail in the coffin moment right there when we settled under that expansion line. Whenever you see that really clean settling action, you need to think, is it either in your favor or is it not in your favor? In this case, it was definitely not in our favor. So you'd want to watch that, and then you'd probably want to monitor your risk, pick a previous level of framework that you are comfortable with. This one right here was what we were specifically looking at right here, this level of framework. Pretty much, if it didn't go at this point, I'm not letting it go past this point right here. And then ultimately, you can see we really boosted right through that level, and it never came back. So if that's the case, if that's happened, or if that happens, what you want to do is just let this market do its thing and let it reset. At this point, too, we were breaking out pretty hard on the daily candle. So you got to remember, if the daily's rotating against you, you need to be prepared. If you're looking to go long and the daily goes against you and turns yellow, and especially if it closes yellow, you need to be prepared to be out of the money if you're still trying to go long for at least a day, 2 days, 3 days, usually minimum, because now you're in a breath on the daily. So that was a big indication right here too. So what's happened since then, and is there still an opportunity in CAD yen? Well, as of right now, according to our research, retail traders are still 80% net short. So good chance they're going to overstay their welcome. This was a handout. This was one of those ones where, you know, they got to keep them coming back to the casino, unfortunately, sometimes, because they kind of treat it that way, a lot of retail traders. And you know, this is one of those ones where the bank's they're going to give them a give me. You know, they're going to let them have this one for the moment. But I guarantee you, for retail sentiment and retail traders, usually realize profits unless they're talking about what we're talking about and looking at the market in this way. This is going to be on loan. These profits, they're going to take them back from them one way or another. So anyway, right now, CAD yen is still 80% net short. What do I see going on from this moment? Well, one thing I'm looking at, I'm not saying do anything right this moment, but one thing that's worth noting is the market framework right here on the daily. You'd see we have a major framework red box with an expansion line that appeared right here in this candle. So that's significant framework. And as you can see, we have a swing high, a swing low, swing high, swing low. So what does that mean? Well, potentially, if we see a turn somewhere in here, and again, this is not guaranteed, but it's something to look for. If you took a loss on this one, there is still a good chance that we will come up and at least come back to value right here. And if we get up through value, there's a chance that we'll attack the swing high. Why do I think that? Because it would fulfill the standard multi-leg expansion pattern of the overall master pattern. This pattern happens over and over and over and over again. It's the most consistent pattern that exists in all of trading. And that's what we're working right now. That's what it could potentially shape up to be. So if you can see a turn happening down in this neighborhood and you find somewhere where you can test an entry that has great risk management and you could leg into a trade, if you can get up to value right here, that's already a huge win to get from a turn down in this neighborhood up to here. If you could get up through value, then you could start protecting your profits at the value point right here and potentially ride it up to the swing high. And then guess what? You can get a crazy breakout through the swing high and then you absolutely smashed it out of the park. That is just a scenario I'm talking about. Again, I have no idea if that's actually going to happen or not, but it is something to keep on your radar, because if you did take a loss on this one, you shouldn't have taken a big loss. But if you did, you need to ask yourself, what has that loss taught me? Well, what we've learned at this point, we learned off of this candle spiking against us and working its way straight down to the liquidity down here, we learned that we got a new leg on this master pattern overall cycle on the daily chart. That's the information you paid for. Now it's time to see if we can use that information to give us an even bigger profit than we were expecting from this neighborhood here. Again, it may or may not happen, but that is the information that you paid for, so make sure you keep it on your radar. Next one on our list is Euro Franc, again for this week. It's actually been last week and the week before that we featured Euro Franc. This one's just been steaming lower, and we want to keep just riding this momentum. Believe it or not, from last week, Euro Franc, retail traders were 83% net long, and the market went miserably against them. This week, they're even heavier long. They're 90% long right now, according to our research. So 90% of retail traders are long. We typically want to position against them. So we're going to be looking to stay short on this pair. Now, it is quite extended, so keep that in mind. Eventually this is going to take a break. It's going to go into a breath and pause. That will happen at some point, but right now, retail traders are super long. I'd like to see it come back to the 50-50 mark of retail sentiment before it actually gets a significant turn, so we'll see if that doesn't happen. As of right now, as far as entry goes, we're overvalued right now as we're speaking. You can see the most predominant value points are at these two price levels right here, so we can kind of just take the average between these two expansion lines, looking in this overall general range, and we are overvalued right now. So we're already in a spot where we could have potentially a strong entry. Now, what would you want to see happen if you entered in this neighborhood? And again, I'm not going to tell you guys what to do. I'm not here to give you trading signals. I'm here to give you ideas to think through. And I'm going to tell you generally how we would be looking at this situation, okay? You still need to do your homework and watch these pairs to see if you're going to get an entry that you're comfortable with. But as of right now, we are overvalued, and as of right now, the daily is still yellow. It's still short. Weekly short, monthly short, everything's short. So until the daily starts turning blue and the weekly starts turning blue, all price action above predominant value levels is coming back to them, just like it has every single time all the way down through here. Even this one right here, we traded this one, came down, blasted through that one. Everything's going back to the lower value points until this is done. So keep that in mind. So if you're entering right now, one thing you could look at, we do have a minor framework right here. It looks like we're starting to get a little bit of a reaction off of, although right now we're just coming into kind of Asian session territory. Things could widen out. There could be some stop-taking moves and things coming into London Open. That's very typical, so I'd be careful with that. You definitely want to give yourself a little bit of room if you're just starting out to build the position for this week. So keep in mind things could happen, but as of right now, it's a good place to start building at least a small position. Now, where's it going to go if it doesn't work out? One piece of framework I'd be looking at is this one up here. So I would say you're going to want to stay pretty flexible to enter this market from generally where we're at here all the way up even to, in and around this neighborhood around this expansion line. If we start getting much above this previous level right here, there's a good chance we're going to go all the way up to hit the liquidity up here. And if that's the case, I would probably take out, if you have a few small positions in or one small position, if it did come up there, personally, I'd probably take it off the table and see what's going to happen and see if you can't let price come up into this neighborhood and see if you can't get a much better entry as long as the weekly time frames at that point. Probably the daily at that point has already gone blue, but the weeklies, see if that holds short if it gets up to these price levels, and then you could probably position yourself for a massive trade coming all the way back down to the same value level. That would be kind of the worst case scenario, but I don't know if that's going to happen or not, but that's something you do want to consider. Now, if it does work out, what would you want to see happen? Let's say it just starts going down right from here and it doesn't stop. Well, we would want to see it get below this expansion level right here, or these two combined. You could take an average between those two if you want. And you'd want to see price action come down through here and then at least start holding below that level and then keep making progress to the downside. If you position yourself up in this neighborhood right here, price goes from here to here, that is your minimum upside. How many pips is that? You're looking at about 20, 22 pips from where we're at right now. That's your minimum upside. Remember, just like CAD yen, even though it went against us last week, if you entered below value, you still put yourself in a strong position to get in the money. That's the thing that we're trying to do first. Get one small position in there. Don't over leverage yourself. Just get in the money. And we're in that neighborhood right now. As long as you give yourself some breathing room, you should be able to get in the money unless it's a massive reversal. And if that's the case, then again, we're looking back at this level of framework to kind of judge where our risk is going to be. because we don't want it to pull back too much through these previous levels of predominant framework. That could indicate that things aren't working out, so we got to pull the plug. So anyway, that's pretty much what I think about this one. I think you should keep taking a look at it this week. Again, do what you want, but this one's going to be on our radar. Last one on our list for this week is none other than USD CAD. So right now, according to our research, dollar CAD is 71% net long as far as retail traders go. So we want to position to the short side. Now, granted, those numbers are not super high. We typically like to have stuff over 75% that we're looking at. But the way this one is set up is looking interesting. And it's kind of at the decision points. Well, let's just talk about this for a minute. One thing you do need to look at is this daily going blue. So that is something that you do want to pay attention to. This could start breaking out and going back long. If the daily, in fact, let's talk about this first. If the daily does start running away on you, you got to look at, we are in a multi-leg expansion on the daily. We have come through liquidity here. This very well could boost. And if it really goes, it'll come all the way back to value right here. However, the fact that we still have 71% of traders net long, chances are we could blow them out down below this low right here before that all happens. So that's really the play that we're looking for here. Is it guaranteed to happen? Absolutely not, but it's an idea to work. So let's look at, as far as the entry right here on the 30-minute, you can see that we are significantly overvalued on the 30-minute if we're trading the 30 into the daily. So generally, we're just looking for price action to at least get back to value, which is right here. And that's a decent upside to start with. Right now, that is about, it's almost 50 pips from where we're sitting right now. I really like the way it's reacting off these liquidity lines right here, especially this one right here. So I'm looking for the price to generally hold in this neighborhood and start working its way down. That would be ideal, but kind of worst case scenario, I'm looking at this previous expansion level right here, this value point. I really ultimately don't want to see price go much above that. If it starts getting much above this level, I would probably cut whatever trades you have and then see what happens from there, because I don't really want to ride an extended breath on the daily, especially because we only have numbers in the 71% range for retail sentiment. So it's not the highest retail sentiment numbers that we like to see, but it's something. And the framework looks pretty good on the 30 minutes. So that's really the big thing that we're looking at here. So that's kind of your big downside, in my opinion. That's the framework I'd be looking at in this general range, not exactly at the line, but you'll give yourself a 15, 20 pip range up around there to see what happens. And pretty much, if it works out, we want to get down to value right here. We want to get through value. We want to get to liquidity down here. Why do we want to get to liquidity down here? Well, that's the ultimate low point down here of the actual downtrend that we're in on the daily. So that's one reason. But also, too, that is the swing low point of the current master pattern that we're in. Right here, you see we have a swing high, swing low, swing high. That is our swing low point. So we're looking to complete a 1, 2, 3. By the time we get down here, it'll be a fourth leg expansion referencing this as the master pattern origination point. And if this is the first time you're watching my videos and you don't know, like, what is this guy talking about? He's talking about these master patterns and these multi-leg expansions. Go watch the rest of our videos on our channel, because I explain this stuff really, really, really in depth, like on pretty much every video, but especially the ones entitled Master Pattern. Go watch those, because then you'll learn the entire methodology behind what I'm talking about. So anyway, that's what I'm referencing. I think dollar CAD is something to keep on your radar. I would stay short, but be careful with this daily right here. Don't let this thing run away on you. If it doesn't work out, it doesn't work out. No big deal. Just let it be. There's always another trade. Something I learned a long time ago. You may feel like this is going to be the last trade of your life right now and it has to be perfect. I guarantee you there's always another trade. So keep that in mind. All right, guys, that's what I got for you this week. Happy trading. Stay safe. We'll see you on next week's video.